we need at least $30 a gram. Forget about this $30 an ounce stuff. And Ben Bernanke is our best friend. You know, I think one of the biggest mistakes people make who are into investing in silver is being too vocally critical of Ben Bernanke, because it is actually messing it up for the silver big time. I know that the paper traders don't think right. They think of silver as basic industrial commodity, not a safe haven. And I guess it isn't a safe haven when you're talking about iShares SLV, because it's nothing but a bunch of paper for the most part. And it's starting to come out to play that we pretty much know why the silver prices aren't going up, because it is being played strictly on a paper game. But we do need the paper game to start moving upward, and Ben Bernanke is our key. He's our friend. Believe me, he's our friend. Recently, I know Ben Bernanke hasn't. He's been holding it back on a QE. Things are looking pretty good recently in some areas. Housing was maybe, they're saying it might be near bottom as record low mortgage rates tempt more buyers into the market again. And you know, in North Dakota, when they're having this big oil boom, that's all figured into the national markets. I mean, if you go over in North Dakota, we're having a big oil boom, you think housing's on a big boom itself. You think real estate's recovered. There isn't enough housing up there. So that's all figured into the national figures. So that helps. It helps. Banks are also starting to put more money of their money to work, expanding commercial and industrial loans last quarter by most since Lehman Brothers Holdings went bankrupt September 2008. So they're starting to open up the spigots on the lending. Since the recovery began in 2009, households have focused on savings rather than spending. And you know, this goes back to something, and sometimes I wonder if all the numbers are there that you could pick out, because I keep thinking about deflation precedes hyperinflation. In other words, governments don't. Ben Bernanke doesn't want to do hyperinflation. I know he doesn't. He's not trying to wreck everything. But sometimes I wonder if people really holding back on his spending. They're holding back because people are unsure. I think that's what's going on, and most people can determine that's what's going on. We might be having a period of deflation because of a psychological element where people are holding back, and all of a sudden the floodgates open up again, and that's where you get hyperinflation. And that's a lot of times it seems to be typical where the governments miscalculate, because it's psychological. People are like scared to spend money. Then all of a sudden it just opens up. It's like building up a dam, and then they spend money like crazy. So when I read into this one line here, households have focused on savings rather than spending, while banks have concentrated on rebuilding capital instead of lending. And it says that may be changing as both have made progress in rebuilding their balance sheet. So it tells me something else too. It tells me something else. It could be leading to a period of more inflation, and Ben Bernanke might be looking at it as, and not being critical of the guy, because I want the stuff to be $30 a gram, or at least $30 an ounce. But I'm saying is he might be looking at this thinking that everything's looking okay now, and he's going to go ahead with QE. Now this article also points out that stocks will be doing better than bonds in 2012, and that's something that Mark Faber says. You know, he's going with the 25% rule: 25% cash, 25% stocks, equities, 25% real estate, 25% precious metals. He's not sure, but he thinks that holding some stocks is better than holding too much cash, because he thinks the stocks are going to do good. And that leads me to believe that they're going to, you know, loosen the money policy, the monetary policy, and you're going to start seeing this flowing into the metals. And I'm telling you, Ben Bernanke, again, he's our best friend. Now, talking about this is something else, because I know twice after the Federal Open Market Committee meeting, he said the same thing again. He was like keeping the QE gun in a holster and still chose to continue on with Operation Twist. And you saw what happened with that. There was decline in all the markets because people just didn't like hearing that. And it's not really his fault. I'm not going to blame the guy here because he's taking a lot of heat for no reason. Actually, he got stuck with this, and there's nothing you could do about it. But it also dropped the gold. It also dropped the silver. But I think he's going to come out, and there's going to be more QE. And it says here, interestingly, that anti-QE former FOMC dissenters, Plosser, Fisher, Kochalarka, or whatever his name is, will rotate out of the committee in 2012, giving Bernanke a more unified, dovish Fed that's going to go along with quantitative easing like Bernanke wants. And Bernanke has been able to manage expectations like an orchestra conductor, keeping quantitative easing in the arsenal, while making it very clear that he's ready to pull the trigger if needed. And he will. The bearded academic has indicated his inclination to pursue job growth at the expense of higher inflation if needed. So the guy is actually a nice guy. He wants to keep people employed. He wants to grease the engine of the economy. He wants to keep the wheels going. And if there's a little bit of inflation, so what? That's what he's thinking. It's more than clear that Bernanke fears deflation even more, raising the possibility that in the event of a market downturn or extended periods of high unemployment, the Fed will unleash QE3. Now, I keep thinking it's going to be in the first quarter of 2012. Now, there's some people saying no, and you really don't know because it's like really impossible to tell. But I think we just got to go with the tendency that Bernanke wants to do QE. But this is the beef I have because everybody is criticizing this guy and they're shooting themselves in the foot. We want silver to be at least $30 a gram. So Ben Bernanke is all on the side of the SLA, the Silver Liberation Army. He's all on our side. He's our guy, man. He's the best friend we got. And we got to keep it thinking that way because this guy is going to help us out a great deal. But he's taking a lot of garbage. It's Bernanke is now so politically toxic that he's complaining to Congress that the media is treating him unfairly and having these leaks at the Wall Street Journal write Bernanke just like the rest of us would. They're criticizing the heck out of him. So he can't even unveil a QE3 without major consequences to his career. I mean, this politician, especially on even, even Obama can't defend him. Nobody can defend him because there's so many critics of this guy. So and if he doesn't do QE3, it's going to be bearish for the metals. So I think this guy's good. That's why I look at it. And this was coming off a zero hedge. He's talking about, do you really think Bernanke can launch another major monetary policy in this environment? Heck, every GOP candidate's talking about firing him or calling his actions borderline treasonous. And with Obama's rating at new lows, do you really think he's going to be defending Bernanke when it's already obvious that both the GOP and the general populace are outraged at the Fed? End of Fed, end of Fed. The simple fact is that QE3 is not coming. This is according to Zero Hedge. I think it is, I think he's going to do it. But we got to make sure we don't give this guy a lot of garbage. At least not without the 2008 type event or something catastrophic happening. Something catastrophic happening. So, and they'll come up with the reason, if we get in another crisis. So there was QE1, QE Light, QE2, and Operation Twist 2 all failed to solve the problem. Why should we launch QE3? That's what they'll be doing to Ben Bernanke. No, we got to say, Ben, you're doing a great job. QE3, 4, 5, 6, 7, 8, 9, 10. And then we have silver go to $30 a gram, $50 a gram. And then we're talking. That's some money. So you know, that's really what we need to get the price on this stuff moving good. And I'm hoping that Ben Bernanke is going to do this in the first quarter of 2012. There's some people out there that are like silver cheerleaders that are saying that silver's going to jump up to $50 in the first half of 2012, and it's going to exceed 60 in the third quarter of 2012, possibly hit 75 in 2012. It probably could if another mentality takes hold where silver is like considered a safe haven in times of monetary uncertainty and government defaults possibly coming up. And I think that psychology might take over because the actual physical buying is continuing to be very strong. And I keep looking at the coin dealer sites and it keeps saying out of stock and even more out of stock or less silver 1 ounce coins available of different types than there was the day before. So I'm assuming that this trend is going to keep going. And if they keep holding this spot price down, I swear I'm 100% sure the QE they're going to add some premiums onto the coins. But to really get those explosive prices that we love, we've been hoping for, like close to $1,000 an ounce, we need Ben Bernanke to help us. And I think there shouldn't be much criticism of this guy as long as he keeps the bubble strictly in the silver market and nowhere else. That's what we want.